Nick Abrahams is Telecommunications Advisor and Global Head of Technology and Innovation at Norton Rose Fulbright. He's also the author of the book Digital Disruption in Australia, and he joins me now. Nick, welcome. So how has it come to this for Telstra?
Well, I think what's happened is Andy Penn has overseen a significant slide in the share price. He's had to do something drastic, and today he's delivered just half a story, which is cost cuts and restructure, but there's no growth.
Yeah. So huge job losses, 8,000. According to the annual report last year, the total number of employees was more than 32,000. So it's like 1 in 4 employees. Is that over the top in terms of job cuts, or just what the company has to do to remain competitive?
Yeah, I think the market was expecting significant job cuts. There is an understanding that Telstra has too many employees, and unfortunately Andy Penn does have to make that difficult decision. But it was largely expected that there would be significant reductions.
Yeah, and is it about on the mark as far as you're concerned, or over the top?
No, it feels like the sort of numbers. If we look at NAB, NAB announced 18% of its workforce would go in the next 3 years. So we're seeing the big companies struggle with disruption and having to remove workers as a result.
And what's the significance of the structural separation story out of this?
So it is smart. You take, they're keeping all the mobile assets, including the mobile towers, etc. That's the high growth part of the business and super profit. And then they've taken the infrastructure assets, which many of those are under forced leases to NBN, and so low growth in those, so the ducts, some of the exchanges, etc., and putting those into a separate vehicle, which ultimately will be sold off, one would think.
And how soon do you think that could happen?
Look, it'll take a little while. It's a year or two away, but there's no doubt that there will be a proposition to demerge those infrastructure assets from the faster growth part of the business in mobile.
And why does it make sense to get rid of them?
Because they are stuck largely with fixed revenues to NBN in terms of the amount of lease payments that they receive from NBN. So there's very little growth can be taken from those fixed assets. So better to focus on mobile and then look for the growth stories in 5G, Internet of Things, and how can you beat NBN?
Yeah. And you mentioned they're keeping their high growth assets. So what more did you want from this? What more did investors want that they didn't see, and why the share price is falling this morning?
Yeah, so what we saw was simplification, and Andy Penn then said that would lead to $500 million of revenue going off the table, which is quite the opposite of a growth story, so it's a negative. And then what I think the investors wanted to see was how 5G is going to be a game changer, how Telstra's going to make a lot of money out of 5G, and how Internet of Things, so the connected world, what's Telstra's position there, and also critically, can Telstra beat NBN? Can mobile beat fixed in some way, and what's the strategy for that? We just don't have that sense of growth about the business. It's like it's a fraction of its former self, is the feeling.
And so what tone or what specifics would you want to see, say, for example, on 5G? What do you want extra from Andy Penn on that right now?
Well, I think it would have been good, to focus on, we've got the 5G auctions coming up soon, that there's going to be a significant investment made in 5G, Telstra is going to lead in 5G, and the revenue expectations around 5G are X. And we just don't have any sense of that. So we think that 5G is going to be big, but there's no great story behind it.
So are you left with the impression that Telstra is becoming a shadow of the big dominant company that it once was?
Well, I think we have to accept that it's a very different world for Telstra. It had a wonderful ride as the infrastructure owner in Australia. That's now gone to NBN, and so Telstra has to look for alternate revenue streams. Very hard to replace that fixed line revenue, which was so profitable of investments that had been made decades ago. So that was driving a lot of the profit. And Telstra has tried to look for new opportunities. So Telstra Health, they've invested an awful lot of money in that. That has not worked. We need to see more revenue upside.
Yeah. And so it's been a really rough ride for Telstra shareholders over the past 5 years or so. Do you see that turning around now after today, after this shock of the 5% loss?
Yeah, look, it's hard to say. We're at historic lows for Telstra, and just since the start of the year, it's off 25%. So one would imagine, are we going to go below historic lows? It's hard to tell. But I think, the story is a good one from Andy Penn. He needed to tell the story, he needed to make those hard decisions. It's just, what's the growth story? And that will start to, I think, engage the investment community.
And just taking into account those workers who are losing their jobs, the story is not a good one for them. Yeah.
No, and I think, it's interesting if we compare it to, say, AT&T in the US. So they're obviously, a scale larger than Telstra, but they are spending $1 billion on re-educating 100,000 of their 250,000 workers to cope with the impact of disruption. So a very different story to the one we're hearing from Telstra, which is, we're going to cut an additional $1 billion of costs out and we're going to remove workers rather than retrain them.
Yeah, so you wanted some more positives out of this